Well, Fed commentary and NVIDIA's AI conference could boost sentiment, but trim those winners and focus on defensive investments as they could get you through the volatile times ahead as the tariff deadline looms on April 2. Well, this is what the market's telling us anyway. I'm Jessica Amir, a market strategist here with Mumu. Thanks for your company for the daily this March the 18th. Well, we've seen the US market continue to rally for the second day. The Nasdaq 100 and the S&P 500 are up for their second session, but the big picture isn't really telling us the full story. We need to scratch beneath the surface to see what's really happening. Now, despite the broader market rise, we are seeing big US tech stocks such as the Magnificent Seven, I guess, lose some of their gains. And institutional investors have been topping up onto healthcare stocks and staples as they prepare for a global economic slowdown. Now, this was fueled by last night's releases of disappointing US retail sales and a downgrade by the OECD to global growth. So what stocks should we be paying attention to? Well, Amazon's one. Here's an example. Amazon and Google both fell back into bear markets, meaning they're down 20% from their highs. But I really think it's worthwhile watching Amazon here because this could be a buying opportunity, perhaps either now or in the future, as well as other Magnificent Seven names, potentially looking at them for a long-term buy and hold, given that they are down in bear markets and historically have always recovered. But for now, though, I do think it's important to note that NVIDIA has been erasing the prior day's gains. We're seeing a very similar tune play out with Tesla. Both of those key pin-up stocks are down 51% in Tesla's case, down 22% in NVIDIA's case. They're down from their record all-time highs, respectively, that they hit in the prior months. But again, I really do think you need to pay attention to the stocks that you want to hold for the long term, and if you think that they could be a potential buy long-term hold. Also keep in mind that Meta and Apple and Microsoft are the only three magnificent tech stocks to stay above their bear market levels, and they're able to maintain their gains. Now, this really shows that investors need to be stock specific in this current climate, and again, just focusing on potentially trimming gains when they can. That's because, as we said, volatility is probably going to continue until the next major tariff deadline. Of course, that's April 1, 2, depending on the time zone that you are in, when we're expecting a final announcements from the US administration about the tariffs. Also, keep in mind, just closing off the discussion about tech stocks such as NVIDIA usually do rally in this week as they embark on their AI annual conference. Now, remember that NVIDIA is kicking off that conference as we speak, but its stock does traditionally rally in this week and then gains are given back. And the stock typically falls in the week after their AI conference. So that's something for you to consider. Although most sectors in the market are moving up, this is another thing that we really need to pay attention to. We need to pay attention to leadership because overnight we're seeing the growth sectors such as real estate and energy lead, but they were the best performers overnight, but big picture, I'm interested in that. That's where we're seeing the most flows go into on the year-to-date picture. It's telling us that healthcare, energy, and utilities are dominating. They're generating this year's best market returns in terms of sectors, given that their earnings are expected to grow and, of course, be sheltered from tariffs. So that's something for you to consider. Consider that healthcare, energy and utilities will probably do well regardless of the tariff outcome on April 2. As for the Aussie share market, that's expected to have another positive session. Again, important to note that we are holding up off their lows. We're officially out of a correction. It's been 2 days now, so that's good to see. The futures were earlier suggesting a gain of about 0.7%. So maybe we'll see the Aussie share market head back towards 8,000 points today, but 7,909 points is the bullseye. That's what the futures are suggesting that we'll get to. Really worthwhile noting too, where is the hot source coming to or coming from that is pulling the market higher? Well, it's gold, and that's because the gold price has punched a new record all-time high as we speak. It's at $3,010 an ounce. Momentum's probably going to continue. That's because the US dollar is continuing to fall. It's at its lowest levels in a month. And what also is supporting gold is, secondly, tariffs. There's lots of tariff worries, and that's why central banks and investors are also buying more gold. Last but not least, the third factor supporting gold is Fed commentary this week that could support gold moving higher yet again, and particularly paying attention to if we see the Federal Reserve say inflation is coming down. If they say that, that means that you might be expecting the US dollar to fall and gold to rise up. Now, what is the gold stock that I'm watching? Here's one that I'm watching, West African Resources. Their shares are the best performer this year in the materials space. They're up 56%. They are leading a bevy of gold producers higher, such as Evolution Mining, Genesis Minerals, Regis Resources. All those stocks are up 40%, while WAF, which we're showing on the screen, for those of you who are listening in on our podcast, and thanks for joining us. Hello to you. WAF is up 56%. Let's just change pace now to industrials. I also think it's worthwhile keeping an eye on industrial stocks. This is a stock that has been, I guess, dominating the leaderboard, really highlighting that industrial stocks are doing well on the ASX for two key reasons. Again, this is a thematic that I think investors should be paying attention to. And so why is that? So first of all, they're insulated from tariffs. And second of all, the market is telling us that this is believed to be a post-election infrastructure stimulus benefactor. So Fletcher Building, of course, the biggest brick builder in Australia. They've also got a very large presence in the US, and perhaps that's a reason why their stock is up 17% this year. Ventia, another industrial stock, following in hot pursuit, they're up 12%. Monadelphous, Worley Parsons, Brambles, the pallet builder, Atlas Arteria, the toll road builder, and operator, they're also doing quite well. So regardless of what you look at, do have a look at the theme, and whatever stock tickles your fancy in industrials, I think will probably continue to do really well as we lead into the election. Regardless of who wins in the election, infrastructure is going to be a key winner. And of course, it's probably going to get some safe haven flows because of what is going on with tariffs abroad. And that's the daily. For more information on stocks we've mentioned, head to Moomoo's platform. You'll find so much information. Great to have your company.